What has COVID done to our local real estate market? That's exactly what we're going to talk about in this video, and we're going to start right now. Hey guys, Hans Strazina with the Gunderman Group at Keller Williams Luxury International coming to you with another video. This time we're going to be talking about the real estate market as of early April 2020 in the COVID era. A lot of what the questions I'm getting from clients and friends and family is simply, what's happening? Are transactions moving forward? Can we get a loan? Can we close? Is there anything to buy? What does it all mean? Is it going to crash, etc.? I found some really great data that I'm going to bring to you in this video and just talk about my experiences and what I'm seeing and stories I'm getting from other agents out there. But I'm pulling a lot of this from California Association of Realtors. They've given us some really fantastic infographics that I'm going to reference in the video. So I'll link to all of their slide decks down in the notes so you can check those out further. But basically in this one, I'm going to go through where we were leading up to the COVID shelter-in-place moment, a lot of the opinions and a lot of the transaction data of where we are now in the last month, so basically the month of March, and then where we might expect to go after a recovery. And if you get value out of this, please subscribe to the channel, hit the little bell so you don't miss any of the weekly videos I put out about all the various real estate topics, interviews with experts, transaction tips, as well as neighborhood reviews, because I'm going to be coming out with weekly content for you guys to enjoy. So without any further ado, let's just get into it. All right, so where were we leading into this COVID moment? Well, mainly the thing that I talk about a lot here in the Bay Area is we're very jobs driven, especially a lot of tech, obviously. Job growth was at roughly 1.6% leading into February, which is not bad considering record low unemployment and actually almost the lowest unemployment we've seen in 50 years. So growth like that basically has brought a ton of people in, a lot of people hiring, and basically the housing stock hasn't been able to keep up. So we've had a real big supply and demand imbalance. We actually have set new job records in California, considering what we lost in the Great Recession. All of that was gained back jobs-wise as of May 2014. That's led to a lot of the housing crisis that we're seeing now. And consumer spending, as we see it, seemed to be doing pretty well, actually. Showed signs of picking up, in fact, and percentages of income to debt ratios as well as financial obligation ratios were very low historically. So people had not a huge amount of obligations, were well employed, and were spending pretty well, which was really keeping the economy humming along. Then, of course, everything changed with the whole COVID shelter-in-place order hitting the state and then hitting multiple states and countries. The economy felt it, and the real estate world is no exception. First and foremost, the stock market got real volatile. Lots of people lost wealth, like literally lost savings, retirement, down payments, all of that. And then generally, people felt poorer. And historically, when people feel poor, they end up spending less and transacting less, whether or not they actually are. But generally speaking, that really shocked the system and held people back from transacting. And California Association of Realtors did a really interesting study of their members, of which I participated. And it asked questions like, what kind of negative impacts on your business are you expecting? What kind of transaction data are you seeing, et cetera, et cetera. So from the beginning of March to the end of March, what they saw is roughly 50% of the people responded, said that they were going to see a negative impact. Now almost all of us at just about 90% are saying that. Clients have withdrawn offers, not quite half the time, but almost half the time now, of offers that they had put in or intended to put in. Listings held back from the market. That's up to almost 3 out of every 4 possible listings from the folks that were surveyed said they have clients who were going to list but now are not. And then about 44% of the people said that they were pulling a listing off the market at the client's discretion that was up from about 13%. New listings in the Bay Area specifically on a daily average are down to 91, which is down substantially from 190 as a daily average just a couple of weeks ago. Average pending transactions went from 137 daily average all the way down to 54. Huge drop in transaction volume, but it's not totally dead. The other thing to note is that with all the volatility in the stock market, relatively speaking, real estate may end up looking like a better investment for folks. It's one that sort of the average person can still leverage and put money into an investment, which you can't do in the stock market, as well as it might feel more stable in the long run if stocks continue to stay volatile. So that puts real estate, frankly, in a potentially very good place. So one thing that I like to pay attention to is what the big institutions are doing. So for example, if you're going to buy real estate and a Whole Foods is slotted to go into your neighborhood, that usually means that they know something about that neighborhood that you don't. Or if you're going to buy an investment property and a Starbucks just pops up down the street, that might be a good indication that the neighborhood is going in a good direction. Just with that same logic, I'm applying that to the market. So I'm looking at some of these big names that you can see on the screen right here. Obviously, their predictions are all over the board, so that's number one. But specifically, one thing that they're all seeing is they're expecting Q2 to be negative. To what degree? Hard to say, of course, but they're all over the board. And then some people have Q3 having a pretty strong rebound, as high as 30%. Some others are saying just small decreases. So either way, based on what's available right now, some of these big institutions are suggesting that we may see a rebound if we can get the COVID situation under control, if the social distancing works, if the shelter-in-place orders are honored and the mandates are held up by all of us, and we actually keep the curve flattened. This is what a lot of people think could happen. And one thing that's interesting is when you look at previous disasters like the SARS or the MERS or the Fukushima disaster, they all rebounded relatively quickly, a matter of months as opposed to a matter of years. And it seems like that's what a lot of these bigger institutions are suggesting could happen here, assuming that we are able to flatten the curve, the social distancing is honored, and a lot of people basically just stay at home and don't spread this thing around. All right, guys, thanks for tuning in. Really appreciate it. Hopefully you got some value out of that. Again, if you want more data, down in the notes of the video is the way to do that. I've linked to California Association of Realtors.org, which gives you access to the slide decks and all the fun stuff that they have there. And if you want to go a little deeper in the comments section, shoot me a comment. I will respond to it. I'll get you the answers and the resources you're looking for. And if you like the video, please give me the thumbs up. Really helps me grow and know that I'm doing a good job. And if you get value out of the channel, please consider subscribing, because I'm going to keep putting out content every week relative to local real estate matters, market updates, neighborhood stats, and all of that fun stuff. So without any further ado, this is Hans Struzina with the Gunderman Group of Keller Williams Luxury International, signing off.